Summer is almost like it just didn't happen. There was nothing that went on. Gold kind of bounced around a little bit up, a little bit down, a little bit sideways, and it hasn't been very exciting. But I'm guessing that some more exciting things are bound to happen this fall, and I'm hoping they're going to be on the upside. I'm going to say within like a year or two. Like I have very strong conviction gold's going to blow through 20. I think it's about 2,200. The real volatility in silver will be again following gold. And so if gold runs, silver's going to run. If gold weakens, silver's going to weaken, but not as much because it'll be buffered by the industrial demand.
Ross Beaty, a prominent mining billionaire and chairman of Equinox Gold, has shared his insights on the current dynamics of the gold and silver markets, emphasizing their potential for profit in the current environment. Beaty believes that gold is poised to reach its all-time high within the next year or two. He attributes this bullish outlook to several critical factors, including robust demand, limited supply, and the possibility of significant macroeconomic events. Additionally, Beaty notes that silver's long-term strength is influenced by its dual role as both an industrial metal and an investment asset, which could lead to potential price increases. As of September 14, 2023, gold prices have remained relatively stable, while silver prices have experienced a moderate decline. On September 15th, gold prices increased as the US dollar weakened against the yuan. This uptick was driven by promising economic data from China, the world's leading bullion consumer. However, investors remained cautious due to the possibility of further U.S. interest rate hikes. Beaty acknowledges that the current gold market has been characterized by stagnation and unpredictability, primarily due to various economic factors such as Chinese economic growth, fluctuations in the U.S. dollar, interest rate movements, and actions taken by the Federal Reserve. The demand for gold worldwide in 2021 exceeded 4,700 metric tons, with jewelry being the primary demand driver in the second quarter of 2023, accounting for approximately 491.3 metric tons. This demand surpasses that for investment, technology, and central banks. Beaty predicts that gold will continue to perform well and could surpass the $2,000 mark. This positive trajectory is fueled by solid demand from both investors and central banks, while silver's volatility is influenced by gold. Before you watch Ross Beaty's interview, subscribe to our channel and give this video a big thumbs up.
It is a bit of a wonky market right now. Things are wobbly economically. The U.S.-China situation, Chinese growth. What's going on with the dollar? It could kind of go almost every way. What's going on with interest rates and the Fed? Quite frankly, it's wobbly, and I don't have a crystal ball. I don't really know precisely. I had strong convictions on gold, and generally speaking, I was right for the last say 5 years. But at the moment, I have to say the fundamentals are still pretty good. Strong demand. Flat supply, that's usually pretty good for price. And then you have all these macro things that could happen, like an easing, for example, a decline in the dollar, like, for example, a correction in the major stock market. And all of those are going to be good for gold. But gold's in pretty good shape for producers like us, 1920, 1930, 1950, in that range. It's a very good price for us. We're making good money. In fact, most of the gold space is making pretty good money. So it's okay. We're not unhappy, but I guess I have a very strong conviction gold's going to continue to shoot higher, and we'll go through its all-time high sometime soon. I don't know what soon means, but I'm not unhappy with where it is. It could have gone either way, and the fact that it's still over $1,900 is actually very bullish. So when things change, it will go higher. It'll blow through 2,000, I think, and then I think maybe to new highs. So in the face of all kinds of negative sentiment, gold has done really well. And demand stays strong, and it's both investors buying, most of it's the investor market, let's face it. Most investors buying gold and central banks buying gold as a store of value, long-term value, exactly what gold has always been good for. It's a form of wealth. Well, silver is a very different metal than gold in many respects, in that it's fundamentally an industrial metal for over half of its demand. The other half is more or less as money for investors. But gold has 99% of its uses as a store of value, as a form of currency, whereas silver is used in so many things. And so you have to look at the industrial demand for silver and the investment demand. I always say it's a schizophrenic metal because it doesn't know where it is. It doesn't know if it's in a precious metal camp or a base metal camp. on the industrial metals side, it's a very strong world, because the biggest demand now for silver is in photovoltaic cells, which is, of course, for solar power, driving huge amount of silver demand. And it's an electronic metal, so it's used in everything digital, everything electronic. And that's really driving its long-term strength as an underpinning of current prices. On the supply side, there's not a lot of new silver coming out of new mines, so it's kind of like gold. It's kind of flatlining right now on the supply side, which is a bullish factor. If you have rising demand and flat or declining supply, you're going to have higher prices. Absolutely. So I see that happening for silver too. Yeah. What that trigger is going to be, though, it could be one of a dozen things, Kai. It could be weakening of the dollar. It could be easing by the Fed. It could be more of a revaluation upwards of the Chinese market. It could be a collapse of the main markets. It could be all these alternative investments, and people realizing, what, for 5,000 years, gold has actually been a very, very solid investment in terms of maintaining purchasing power. Even in the last 5 years, it has been, the last 10, the last 20. Let's go back to gold. It's a proven thing. Let's not toy with the meme stocks and all these other kind of flavors of the month. And let's go back to something that's historically kept its value as just insurance. Everybody should own some gold. And actually, if you want the real leverage, you own the gold equities.
During the initial decade of the gold bull market, mining equities demonstrated impressive performance, surpassing the gains seen in the price of physical gold. However, this trend took a turn after gold peaked in August 2011. In the years following, gold mining stocks struggled and significantly underperformed the rising price of gold. According to insights from the Sprott Gold report, several factors contribute to this underperformance. However, in their assessment, one of the most prominent barriers to higher valuations for gold mining stocks is the prevailing belief that the current gold price, hovering around $2,000 per ounce, is not sustainable in the long term. One crucial factor impacting the relative appeal of gold mining shares is the overwhelming success of ETFs like GLD and other financial instruments closely tied to physical gold. However, Beaty's perspective is that these equities are currently undervalued relative to gold prices, offering potential investment opportunities for those willing to explore this contrarian viewpoint.
I've watched the cycles come and go, and I can say that never in my career have I seen gold equities so weakly priced relative to the gold price itself. For some reason, we have this real disconnect today between the value of the equities and the value of the metal. I've never seen it before. In fact, in the 80s and 90s, gold equities were trading at 2 and 3 times net present value. Right? And today they're trading at 0.4, 0.5, 0.6 times net present value. So that's it's only this year, by the way, that's really happened. And so, it's very unlikely that things are going to stay like they are for very long. And you're either going to have the gold price collapse or you're going to have equities rise in value. And I would bet on the latter. I think the gold equities are really, really cheap, historically cheap, fabulous value. As you go down into the higher risk companies, from the seniors to the intermediates to the juniors, the discount is even more. So the juniors today, they can't get equity capital for exploration, for development. The intermediates have really crummy price to net present value ratios. The seniors are okay, but not as valuable as they were historically. And it's just one of those things. Buyers are on strike. And you could say there's a whole bunch of reasons, but it's kind of irrelevant. The real question is, when is it going to change? And is it going to change? Typically, in a bear market for equities, there's some catalyst. And when the catalyst happens, it could be a new discovery. We've had a couple of big discoveries like Skyline that have propelled value in that exploration space. It could be the success of some good stocks that have done well, like Alamos Gold, for example. It's done really well. It's really had a good run. There's a bunch of companies like that. But it'll be some catalyst, and all of a sudden, bang, overnight, you're just going to see a doubling of kind of across the board, because the metrics are going to be there. The valuation parameters are going to all of a sudden readjust to what they have been historically. Now, what causes that sentiment? When exactly is it going to happen? I don't know. But it happened in 2016. It happened in 2012. It happened. I can point to many times. And when it happens, you are going to want to own these stocks now, because it'll be It'll readjust before you know it. It'll readjust like instantaneously, and everybody's going to say, "Oh God, if only I bought that stock that I was looking at that seemed really cheap and really good value." But it'll be too late. So this is the buyer's market right now. There's fabulous value in the space, historically unprecedented in my career. I'm buying myself right now. I'm being somewhat selective, but I'm buying right now. I'm buying my own company, Equinox Gold. It's dirt cheap. There's all sorts of catalysts within that company, and there are within most companies. It could be exploration results, it could be production milestones, it could be cost reduction, that kind of thing. But it's today. It's a great time to be buying gold equities.
Regarding silver, Beaty highlights its unique volatility, attributable to its dual role as an industrial metal and investment asset. Notably, a study from the University of New South Wales forecasts that the solar sector alone could consume between 85% and 98% of global silver reserves by 2050. Beaty underscores that silver's long-term strength is driven by its crucial role in photovoltaic cells and electronic devices, emphasizing the metal's significance in industrial and investment contexts. Given their current dynamics, the potential for price increases, and the factors impacting their performance, how do you perceive the future of precious metals, particularly gold and silver, as investment opportunities? If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.